Hello and welcome to a CMS Forex morning brief. I'm your market analyst, Nick Nassad. Today is Thursday, June 10th, and it's around 11 a.m. Eastern. Stocks in the U.S. opened very strong in the U.S. session following gains in Asia and Europe, which extended the sense of risk appetite in financial markets in the New York session, helping to boost risk-on trades following their rally in overnight trading. The main impetus for the rise was strong Chinese economic data, as well as some other bright signs from Asia. We had confirmation of the strong exports from China, which increased 50% on the year in May, which helped to reaffirm that there is still global demand for exports. Also, the Australian economy added 27,000 jobs in May, as the unemployment rate dropped from 5.4% to 5.2%, also a very strong release. Across the water from Australia, the New Zealand Central Bank hiked rates by a quarter point to 2.75%, its first increase since slashing rates at the onset of the financial crisis in 2008. So that means that it believes that its economy is strong enough to begin tightening rates once again. That, of course, follows the Bank of Canada raising its benchmark rate from 0.25% to 0.5% 2 weeks ago. We had two more central bank decisions. First, the Bank of England held rates at 0.5%, while the ECB held rates at 1%. The ECB press conference with President Trichet was closely followed, as he defended the role that the ECB has played in buying up government bonds from troubled Eurozone nations. He said that money markets were dysfunctional and that the ECB had to step in. Critics have said that that move amounted to bailing out indebted governments and could fuel inflation. In Trichet's defense, the ECB was the only institution that could help stop the escalating crisis, as it will take time for the European Union to set up its stabilization package, which amounts to a $1 trillion lending facility if we count the money that could be provided by the IMF. Trichet stressed that the extraordinary measures that the ECB took were temporary, and the euro rallied during his press conference. In the U.S., we had jobless claims decline, though not as much as expected, as claims fell to 456,000 for the week ended June 4th. However, U.S. trade data came in on the weak side, as both exports and imports declined in the month of April, with the gap growing to $40.3 billion, with the trade gap growing to $40.3 billion for the month, which was the largest trade gap in more than a year. Still, traders and investors focused more on the positives rather than the negatives, and overall we had risk-on trades continue their gains that we had seen earlier this week. First, let's take a look at the euro-dollar pair. In yesterday's daily video recap, we had ended with the euro sliding, though we had set up this upward sloping support trend line, and we could see that we came close to testing it, and we bounced up off this 1.1960 level. First in overnight trading, as we had the positive China data and Australia data, and then in the early part of New York trading during ECB President Trichet's conference. So we did top off at this 1.2130 level, and we came back down to retest what is here the 200 period simple moving average in the 1 hour time frame. So we'll see if perhaps the rally in this pair has run its course for today, and if we see a little bit of a pullback. But overall, this 1.2150 level acts as very important resistance, as it was our support back here in last week, though we did have a bit of a lower low in last week's trading that we did move above. Now we can also draw a new resistance trend line connecting our highs here, and we'll see if we come close to testing that level, which also corresponds closely to the 1.2150 level. Jumping now to one of our commodity currency pairs, the Aussie US dollar, we see a sharp rally in favor of the Aussie overnight, as we had the positive data, and then a continuation of risk appetite helped to fuel gains during the European session and now in the early New York trading, and we come close to testing this resistance around 0.85. If we zoom this pair out, we see that we had looked at this trading range that we have, the sideways range, with our resistance around the 0.85 level. So we come close to testing that already. We broke above this downward sloping level of resistance that we had tested in the peak of yesterday's rally, and we moved above that during the Asian session. So very strong extension of risk appetite in this pair. as we saw the positive employment data from Australia, but also the positive Chinese data means that China is still hungry for Australia's raw materials. Similar story with the US dollar Canadian dollar, as following a little pullback in late New York trading, we had a rally pushing us down below the 1.03 level. The first time we've been below that level since May 18th. So we managed to clear our low here 1 month. That had been our lowest for 1 month on June 3rd, around 1.0340, and we broke even an upward sloping level of support. If we connected our lows back here from April 21st up through May 13th, and now we could see that we actually broke below that as well. So some positive signs for the Canadian dollar as we have risk appetite in the markets, and we'll see if we retrace more of this upswing in favor of the greenback as we had fallout from the Eurozone sovereign debt crisis, which fueled move towards safe haven currencies like the greenback. Drawing a Fibonacci retracement from this low here on May 13th up through our high on at 1.0850, we see that we've moved below the 61.8% retracement and now actually bounced up off the 76.4 area. We'll see if there is some pullback to the sharp gains in U.S. equities throughout the rest of the New York session. We see we already have a bit of a bounce back in favor of the greenback in this pair. That seems reasonable considering the strong gains we had seen throughout overnight and early New York trading. The question is, if we do have continued gains and in equities, and commodity prices like oil, if we have another swing down in favor of the Canadian dollar later today. One of our other risk-on trades is the pound gaining against the greenback, as the greenback is a safe haven, and the pound is more sensitive to risk right now. So, following a very strong rally in yesterday's session, we tested the 61.8% retracement of our downswing from June 2nd to June 8th, and following our little pullback here in the late New York trading, we bounced up off our 38.2% retracement, but also the 1.45 level, and rallied and were able to move above our resistance from yesterday, and as of 11 a.m. We're at the top of our we're pretty much at our daily high right now, near the 1.4650 level. Taking away our Fibonacci retracement, we can also plot a simple downward sloping level of resistance from our highs here, connecting our highs back here on June 2nd and June 3rd, but which also lined up very well with our high yesterday, and we could see that that was the area that we had to push above in today's session, and we did manage to do so, climbing above 1.46. So it's rather comforting to see risk appetite continuing into a third session. Here we can't see it as well. It's better to go back to our Aussie to show that we have now 3 sessions in a row in which risk-on trades have gained, as we have had no negative news coming out of Europe, so that has given a chance for risk to rally. So that's it for today's morning brief. I will be back later in the day with a full daily video recap in which we will go over the fundamental releases a bit more closely. So till then, good trading.